estate investors out there because real estate's a great thing to invest in, right? Real property, or maybe you got married, you have a second home, maybe you have Airbnb set up, right? Or what is that, Verbo that's set up, where there's certain things that you can account for as rents, and certain things you'll be able to write off. And I think it's very important to know the difference between the two. And if someone has a conversation with you about the importance of properly tracking things. So in case that you get audited, you have a way to back up your paper trail. Audit's never a bad word if you have the documentation online to support what you originally filed. So I'm keeping this very, very short. If it's something that you need to ask specific questions about, I will drop a comment. Pardon me. I will drop an email below where you can reach out to me and contact me, and we can go from there. So let's talk about keep track of your receipts. That's the most important thing. The IRS 9 times out of 10 is not going over bank statements or credit card statements for you. They're going to want you to have receipts, invoices, etc., organized and prepared for you. They don't always go over every single line item, but the line items they do go over, they're expected to see receipts for them. So make sure you save your invoices if you have contract work done, maintenance work done, and these are some expenses that are going to be allowable expenses. Fees from your real estate agent or broker. Make sure you keep track of some of those things, and I will go over in person with you what are going to be allowable expenses. This is depreciation year in to year end. If you switch tax professionals, or if you decide your taxes are more complex now, and you decide to have somebody and decide to pay somebody, there's a lot of different scenarios that you can experience. But one thing that's very important is make sure that you keep track of your depreciation. All right, that's super important. Make sure that your new tax professional knows that you have depreciation to deal with, because it's not something that's automatically going to flow over, and it could cause you to pay more in taxes. It could cause you to lose money, so to speak, when you pay more in taxes if you don't report it properly. And you need to make sure it's reported properly in the first place, and it's not the wrong type of depreciation. And we can talk about that at a later date. Knowing what is allowable expense is super important. It's probably about 25 I can think of off the top of my head. I'll go over 5 real quick. Maintenance expenses I talked about earlier. Your of course, any type of real estate transactional fees, those would be allowable expenses. Transportation going to and for your rental property to collect rents, or to go to collect rents, or for maintenance services could be a good example. Of course, depreciation is a good allowable expense. Any utilities you might leave on when the house is vacant, such as electricity, such as phone bill, and before the property is either leased out or sold, that's important as well. And I'm going to go just very, very briefly to the next one. This is going to be a 1031 exchange, and this is for people who are buying properties and selling properties. And this in a nutshell. To keep it very, very simple, you buy a property, you normally have like 180 days from the date of sale to put the money up somewhere where your capital gains won't be taxed. That's the simplest way I could put it. Of course, that needs a more detailed explanation, and that will be given on a case-by-case basis if there's something that might fall into your realm. This is the 1030. No, pardon me. Excuse me. I just got back from dinner. The 1031 exchange is really going to apply more to people who are selling, okay, and people who are maybe looking. Maybe I might say this. I like to think that most likely it's going to be for somebody who invests. They hold the property for so long they sell it, as opposed to somebody living somewhere for 5 years and cashing out and moving down the road, and then having additional property they held on to for a little bit and now they decide to sell it. It's kind of a different ball game. But what this does allows you to tax defer any capital gains, and you can move it over indefinitely into a new property. So you kind of shuffling money around a little bit. And we haven't talked about passive loss activity. That's kind of important too, because that can that can go forward with you and be a carry forward that you can use in your retirement years to offset your tax debt. So when we're talking about any type of a carry forward or a carry back, business normally has a carry back of 5 years. In real estate, to my impression, the carry forward is going definitely to deceased. You carry backwards do not. So what's this loss carry forward means? It means that if for some odd reason you take a loss this year, and the next year you wind up having a gain, well, with your passive loss carry forward, you can use that to offset any capital gains. So if you have any questions, just leave me or drop a comment or inbox me. This is my pleasure talking to you. Have a great day. Appreciate it. Thank you. This is Mike over JB Financial. Happy Thanksgiving, first of all. All right. Tax season's over with, right? We're going to a new tax season in about a month and a half. Let's have a real quick conversation about some tax planning. All right, and this is going to be a series of videos, and we'll talk about different ways. You're a highly paid W-2 worker. This is what I'm really shooting at, because your best friend is going to be your side hustle. Your side hustle or your side business, however you want to phrase it. It has to be something that generates revenue. That means you made a sale, okay, and it's something to have expenses. It normally takes 3 to 4 years for a business to get off the ground. Some cases people move quicker and want to turn a profit a lot sooner. In some cases they don't. Whatever your situation is, I really want you to think about adding a side hustle to your mix. It could be something like Uber. It could be something like DoorDash. It could be something like, I have friends who do multi-level marketing, different multi-level marketing companies, Plexus, PHP, Prime America. Those are good examples. My company all has a business offering. We train people how to start their own insurance and tax offices from anywhere they want to start one at. Those are examples of some side hustles that will open up a whole set of deductions for you that were not accessible to W-2 employee. And it's done so legally. It's done, and it can be backed up if done properly. Proper business structure. Consider separate banking. Keep track of your expenses and what you're bringing in. And that's what the banking comes in. Try purchases of accounting quickware, or try something cloud-based like QuickBooks, which QuickBooks disclaimer, people put the wrong shit in certain places in QuickBooks sometimes. We're pretty good about going through and picking out and sorting out and organizing it, but that's another discussion for another day. We'll have that discussion. If you're using QuickBooks, you're one of my clients, hey, we want to talk to you. We want to tell you to set your chart of accounts up and make sure you have things in the right places. So you don't either claim something you can't claim or claim something and we file it for you and then it doesn't get figured out and it causes you some issues. If it's a allowable deduction, well then if it comes up, you just have to refile it. Okay? If it's not allowable deduction, that's a different set of problems. Okay? Contract workers. That's really a good example, and W-2 workers. 1099 guys against W-2 guys. Really quick, this is something so many small business owners don't get right. W-2 guys, okay, first of all, let's get this straight. It don't matter what you feel like paying, what's easier. That's not what the guidelines are. But W-2 workers tend to have set responsibilities, clock in set hours, and they work on a schedule. 1099 guys use their own tools, don't work on a schedule, have set hours. So those are two differences. And what does that mean for you? Well, it means a lot. And first of all, it means you make sure you have them filed in the right place. Okay? W-2 workers go on wages, contract workers go to contract labor, or they go on commission, depends how you pay them. Okay? But here's something else that's kind of tricky. The W-2 guys require you to hold their payroll taxes for them. So you take the payroll taxes from their check, and you're supposed to remit those to the government in a certain fashion. If you do not do so, very bad things will happen. Okay, and it can happen out the blue. Small business owners, if you give your clients, if you give your customers 1099, if you give your employees 1099, and if you got a small business, there is a possibility if they're actually doing W-2 work, they'll call the IRS and they'll explain the situation to them while you're running your business,
And ours to give them the go ahead to go ahead and file W-2 wages, and guess who's going to owe those back taxes for the payroll taxes? Guess who's going to the payroll taxes, the FICA and Social Security? It's going to be you, and out the blue, out of nowhere. And I've seen business owners get in trouble for it. And it doesn't mean they're bad people. It's just that they had a way of not taking their craft seriously. You know what I mean? And thinking this was optional. Well, I'm explaining to you now it's not, and it has to be done a certain kind of way. This doesn't apply to everybody. I mean, ideally, most people I deal with, they come in and have a standalone thing they do, and they rock with that. Okay, and it's just them. When it gets complicated, that must mean you're making money when you start hiring people 9 times out of 10, or you're starting to make money. So now your side hustle is becoming like actually your job. So now you have a different set of strategies you have to rely on to reduce tax debt as far as just expensing it out. And we'll discuss that at a later day, at a later time. So yes, if you're a W-2 employee and you're highly paid, or if you're not, you know, and you just want to try, you have plans to start a company and organize something or a business, or just want a couple extra bucks a week, that's great. But make sure you keep track of all your receipts. Put some type of accounting software in place, or a system, or use logbooks, ledgers, or have a system in place to help you track what your expenses and your revenue are, so you take full advantage of during tax season. If you got any questions about that, give me a call. I'll leave a number below. I'll leave an email address, and of course you can reach out in the comments in the inboxes here. Hey, have a happy Thanksgiving. I'm about to take a couple of days off. It's a pleasure serving you as always. Have a great day. Thank you.